Hello, this is Eric Parnell, Chief Market Strategist from Great Valley Advisor Group. And what an interesting April it's been. We finally got the long overdue correction in the US stock market. During the month, we saw the S&P 500 fall by as much as 5%. But we've seen a strong rally here in recent days as the month has drawn to a close. So the question becomes, is the correction over and we're set to move higher for the remainder of the quarter? Or is another pullback yet to come? Now we're at an important inflection point in the markets right now, and we can see that through what's known as technical analysis. In the chart in front of you, you can see the S&P 500 is pressing right up against the blue line. That's the 50-day moving average. That is a key resistance point for the market right now. If the markets can continue to push higher through this blue line, that suggests that a new rally is underway. However, if the market's going to pull back, this is a likely place where markets could pull back lower for the next few weeks. So we'll know a lot more in the coming days. But the thing about technical analysis is it gives us the vision about what we can expect from the market going forward that's based on the underlying fundamentals. So it's important to see, if we do get a rally, is it being supported by the fundamentals behind the market? One of the key drivers of stock market performance over time is corporate earnings. And if we take a look at trends in corporate earnings and the forecast for corporate earnings, we have good reason for optimism. When the market's rising over time, and we see this going back over the last 25 years, it's been supported by rising corporate earnings. On the flip side, when we've seen sustained corrections in the market, corporate earnings have been falling. What are we seeing today? Corporate earnings are rising strongly. And we forecast through the remainder of this year and into next year, the expectations are for corporate earnings to continue to rise at a double-digit rate. And when we take a look at the trends in corporate earnings relative to the S&P 500, this suggests that the path of least resistance for the US stock market, if anything, will continue to be to the upside. So as we go through the coming weeks, it'll be interesting to see whether the current correction is over. But as we look through the remainder of the year and into next year, as long as expectations around corporate earnings continue to be strong, that should be highly supportive for the US stock market. Thanks for joining me for this latest market insight, and I look forward to seeing you again soon.